Hi there, Serial Trader here. Let's have a look at the major US indices and we'll point out some things starting off with SPX here. Now the Elliott wave count currently, so we got our initial 5 down for either 1 or A, got our 3 up for 2 or B, and now we're looking pretty mature, looking pretty mature in this second leg down in either a 5 down for 3 or C. Now currently it's unknown whether it will be a 3 or C. But so far, just based on the SPX chart here, I'm leaning towards it being a C wave. And I'll go through a few reasons for that. So if we take the initial slope of our first leg down here, so 1 or A, and that gives us our slope from the high to the low. We take that over here off of our 2 or B, and we project it down from there. You can see that so far this current leg down that we're on has been shallower in slope. So you have to drag this over to get the slope of this move from high to low. So we have a shallower slope. So far we're actually consuming more time to travel not even quite the same distance. So just to point that out, I'll show that the time consumed in this initial leg down projected off of our correction upwards there. So right here would have been an equal amount of time consumed, and you can see that we're already going beyond that, and we're getting close to the 1.382 multiple of the time consumed in this first leg down. So it's more time consuming, it has a shallower slope, and so far we haven't even moved, although we're close to it, we haven't even moved the equality distance, and that would be at 2739.50, okay? So it would be almost ideal if we just come up just shy or get right to that equality relationship and then bounce up. And who knows whether the low on Friday sticks or not. Since it closed near the end of the low of the day, it probably won't, but who knows what happens over the weekend here. So based on all that, so far, I think this is just going to be a C wave down, although I'm certainly allowing for a surprise. And if we are going to just keep going down in a third wave, we'd want to break out of this trend channel. And you see how I drew this channel. I have the origin of wave 1, off the termination point of wave 2 or B, again 1 or A, 2 or B, and then in parallel off the termination point of 1 or A. So that's our base channel. So if we stay within this channel, it's just a corrective price channel. But if we break convincingly out of the channel, then likely this current leg down that we're in is going to be a third wave. And then we'd be looking at least the roughly 1.618 relationship would be in the mid 2600s, which also coincides with basically a 50% retracement of this entire move up from the December lows. So that's an interesting technical confluence there. All right, so I've kind of made the case that currently I'm leaning towards this being a C wave down and just a correction of the overall strong uptrend that December gave birth to. Now, if we look at, I want to show an example of a unmistakable third wave. So in Bitcoin here, fairly recently, we had that initial move up off the bottom, and that was again from the December low in Bitcoin. Initial move up off the bottom, wave 1 up. We had this deep wave 2 down, made a higher low, and then for a while it was unknown whether this would just be a C wave up, like an A, B, C up, or a 1, 2, 3 up. Well, you can see once we smashed through that parallel trend channel, the base channel, smashed through it, danced around a bit, and then just accelerated. So this is an unmistakable third wave. You see how sharp it is. You see how much more distance it's traveled in comparison with wave 1, although this is a extraordinary specimen of third wave strength, but nonetheless. And you see there's no way you can call this A up, B down, and C up. It's just traveled too far, too fast. It's too aggressive to be a third wave. You see you get nice and overbought on your oscillator, so in this case RSI. You get overbought and you basically just stay overbought and just keep going, slightly work off that overbought condition, but stay fairly high on the RSI and keep churning higher. So that's the characteristic of a third wave as far as slope and distance traveled and momentum and all that. And that's a bullish example. So a more recent bearish example of a third wave is oil. So we had our initial wave down here, and that's definitely a confident now. Wave 1 down, we had wave 2 up, and then look at this, wave 3 down, smashed through the parallel trend channel of the 1-2 base channel and traveled faster. Okay, so getting back to that slope analysis, so you see I take the slope of this initial leg down, I drag it over to where wave 2 started, and you can see we're much sharper in slope and traveling fast and going deeper than the initial move down. So I think we've done just about a perfect so far. I'm not saying it's over yet on oil here for this short-term wave 3, but so far we've done an almost ideal 1.618 distance traveled 1 versus 3. So that's a nice example of a third wave on crude oil. And you can see a third wave, jumps out at you on the chart. Now, if you come over here to SPX again, it's not jumping out at you. Right now, it looks very measured, very orderly. And again, for those other reasons I said, currently expecting this to be a a C wave that terminates rather soon. Although, if it just keeps going and blasts down, breaks out of the channel, then of course we have to change our count a little bit and embrace that it's a third wave. But currently, not seeing it. And also, I'll point out that we just kind of came to the last day of the trading month, and you often see a nice pivot on major markets, near the end of the month, beginning of the next month. If you look over here, our top, that was on May 1st, okay? So that was right at the beginning of the month. That marked a significant top. We spent the month, going down in a downtrend. Now, May 31st, we put in a potential low here, and does that mean we'll pivot off of that for the month of June? We'll have to see, but it'd be a nice coincidence if we did, given all the other... I mean, we can count this C wave, if we dive in a little closer here, the substructure, for our potential C wave, as I'm calling it here. We got 1 down, 2 up, and then a 1, 2, 3, 4, 5 of 3, 4, 5. So all the subdivisions are there. You can certainly count this as a completed 5 down. And we're near the equality relationship and all that. So we'll have to see, but potentially looking for a buying opportunity, but I'd like to see a little bit of a reaction here. Maybe get your first little short-term 5 up, 3 down, make a higher low, and then go for a trade there off of that. But I think we'll leave it there for the waves. But we'll go to the thinkorswim candlestick chart. And from a candlestick perspective, there's definitely some things to point out. So still nothing here for the daily candles. We are oversold here on this daily oscillator. I'll point that out. We gap down. So did we gap down? Is that an ending gap where we gap down in a final exhaustive down day? We'll have to see. If that gap gets filled soon, then that was likely an ending gap, and then we're going to start heading back up. Maybe look to fill this other gap up here as kind of a shorter term upside target. Just going off of the gap analysis. But if we go to weekly candles, let's see if there's anything here. Okay, so weekly candles, obviously a big red down week, but not really a candlestick signal in itself. Close near the lows of the week, so that's a shaven bottom. That's somewhat bearish, favoring at least a little bit more downside this coming week, just based off of that. And if we look at the monthly, so this is telling a bit of a different message than the short-term wave structure. The candles look a little more bearish here. Monthly, this is interesting. We have a monthly bearish engulfing for the month of May, and we engulf 2 prior months' real bodies here. So that's a strong sell signal. And if you see the last time we had a monthly bearish engulfing, well, that was the kickoff there in October. And then we had a monthly doji, and then another monthly bearish engulfing in December, but then no follow through, and we came up from there. So if this... and even after the monthly bearish engulfing in October, you still have this bounce up here, or at least a partial bounce up in November. So just because we did a monthly bearish engulfing doesn't mean we go straight down, but it's certainly something to be aware of. That's a major technical sell signal on the monthly chart. So this could be the kickoff to something more sinister, but so far not seeing any major clues of that on the wave structure, at least on the short-term basis. So currently still expecting this just to be a retracement of the December rally, although certainly open-minded if it accelerates, then it might be something different. Okay, so that's kind of the candlestick stuff there for SPX. We'll go to the Dow Jones Industrial Average. And you can see the Dow basically tracing out a similar pattern, although showing a little bit more relative weakness. It's broken some previous supports here, and on the equivalent levels for SPX, we haven't broken those yet. And you can see we're well below the 200-day moving average there on the Dow. Starting to get into the oversold condition on the daily. And let's see, as far as retracements from the Dow's December move there, or sorry, the move up from December. Let's see where we're sitting here for our retracement levels. Trying to get this thing to there we go. Okay, so we're right at that 38.2% retracement, so could get at least a reaction off of that here soon. But certainly watching this carefully. Now on the weekly on the Dow, big red week obviously. And is it a signal? No, it's not actually a signal, but it's obviously a strong down week with a shaven bottom, similar to SPX. If we go to the monthly, do we also have a monthly bearish engulfing here on the Dow? Yes, we do. So monthly bearish engulfing 3 prior months real bodies. And let me just double check that. Okay, we closed that month at 26,592. We opened this 26,630. Yeah, so definitely a week monthly bearish engulfing. 3 prior months engulfed, so that's a very strong sell signal. And that's definitely looking more sinister. Closing below the monthly T line, I'll add. So the candlestick here on the monthly is definitely arguing something more bearish, but we'll wait for some confirmation before we go there. Okay, so that's the Dow. Nasdaq composite. Nasdaq, very similar structure to SPX. Got below the 200-day moving average and closed below it there on Friday in the oversold condition on the daily oscillator. Weekly. Okay, so weekly, no signal there in particular, although obviously in a downtrend, closing below the weekly T line still. Monthly. So monthly we have a bearish engulfing here on the Nasdaq composite as well, engulfing 2 prior months. So more similar to SPX than the Dow. Closing below the monthly T line, so that's definitely a significant technical development here. But again, we need confirmation on the shorter term stuff to embrace a more bearish stance. Okay, so that's the Nasdaq. Now on the VIX. On the VIX, we're not confirming a real bearish scenario yet, so we're still making a lower high on the VIX from our initial move down in the indices, where we made a spike in the VIX here at 2338. Even though we've made lower lows in the indices, we've made lower highs on VIX. So VIX currently diverging a bit from the equities. Now, if we really explode down in a third wave, obviously you'd expect VIX to confirm up and get above this level, but currently VIX arguing that this is, in my opinion, the weakness in VIX is kind of arguing that we have a C wave down and not a third wave down nearing completion. But you can you can change your mind. Like over here, for example, we had our initial peak and VIX kept making lower highs, but then we started making higher highs, and then we made that even higher high than the initial peak here. So VIX can just kind of be a lagging thing sometimes, so I wouldn't be so confident saying, oh, VIX is making lower highs. It's just a C wave down, although currently this is one piece of technical evidence that's arguing for that. But I wouldn't rest on that alone. Okay, so that's VIX. Now on the VIX VVIX tool, there's some other things here. So we have some bullish divergence. So VIX making slightly higher highs from this reference point, even though VVIX making lower highs. And also bigger picture, so VVIX making lower highs from that peak, and VIX still making a lower high from this measurement point, despite SPX making lower lows. So this is kind of arguing that the volatility complex is not confirming the weakness in the indices, so we're looking for a pivot soon. Now obviously we need some confirmation. We got to get VVIX to really collapse here, get below the red moving average. Then we got to get SPX back above this blue moving average, and then we'd have a a buy signal according to this tool. But so far it's just on watch, but it's not there yet. All right, so that's probably everything I wanted to go through there. As far as trading goes, I'll probably be closing that spread here pretty soon as we're close to that equality relationship, looking over solely short term. Might be fishing for a buying opportunity, but I'd like to see a little bit of a reaction and then a little bit of a retrace, make a higher low, and then perhaps that's a good entry for at least a bounce, if not a continuation move to the upside. But we'll have to see how it plays out this week. All right, Serial Trader signing off.